Hi there, welcome to Kneppy Invests. Profit upgrade. Are there two better words when you read an announcement? If I ever see a company release a profit upgrade, I immediately become interested in that company. Not necessarily take a position in the company, but I will pay attention to see how the market reacts to the announcement. If you see a massive rise in share price, it was a surprise to the market. If the market doesn't react much at all, potentially the market has already priced in the potential for a profit upgrade. The company I'll be looking at in today's video, Australian Clinical Labs, have released two profit upgrades in the past 3 months. This company has been experiencing some headwinds or tailwinds with COVID-19. Not complete tailwinds because some of their businesses, because they are a pathology business, have seen a little bit of tailwinds because some of their services aren't being used as much. But definitely they have been experiencing some tailwinds. Now, Australian Clinical Labs is a recent IPO on the ASX. They listed in May of this year. And for the very fact they've already released two profit upgrades in the last 3 months is a good start to their publicly listed journey. Australian Clinical Labs is a private provider of pathology services. In fact, they are the third largest pathology service provider in Australia behind Sonic Healthcare and Helios. Both of those companies are listed on the ASX. So it looks like the three biggest pathology services providers are listed on the ASX, and they account for something like 70 to 80% of pathology services in Australia. This area is growing. It's been growing about 5% per year over the past decade. And as the population in this country does grow older and older through time, we will see pathology services expand as our population grows older. The history of clinical labs goes back to 1987, but it really begins in 2015 when private equity, I think it's private equity, Crescent Capital Partners, which still owns 19% of Australian Clinical Labs, acquired Healthscope's pathology business and then acquired three other separate pathology services in 2015 and 16, aggregating them together and then rebranded all those different pathology services into Australian Clinical Labs. They also hired Melinda McGrath as the CEO. She has a 1.4% stake in Australian Clinical Labs, and she's done an absolutely wonderful job with Australian Clinical Labs over the past 6 years, and she is actually one of the reasons I've decided to take a position in this company. I will have a look at management, particularly of new IPOs, to see how they have performed, see how long they've been in the role, and see what they've been doing once they've been in that role. And I think she's done a wonderful job because this company has been expanding at a greater rate than the market itself. And again, the largest shareholder right now is Crescent Capital Partners. They still have a 19% stake. Does look like that has come down a bit over the past year or so. At one point, I think it was over 40%. Now it's 19%. The market cap of Australian Clinical Labs, $950 million. That's at a share price of $4.70. And now I'm recording this video just after open on Wednesday, the 29th of September. The market is down about 1.5% as I speak. So there's a chance that the market cap of Australian Clinical Labs could be quite a bit lower right now, depending on where the share price is trading at. The ticker code of Australian Clinical Labs is ACL, and I'm always getting it mixed up with Alcidion, which has a ticker code ALC. Whenever a company does IPO onto the Australian market, I always go back to have a look at the prospectus they do release during the IPO process. And usually it's a fairly long document, but this is where you get a lot of information about the company. You also get forecasts, or financial forecasts, they do expect for the first year, even 2 years, they are listed as a publicly traded company. And Australian Clinical Labs did that. Now, this is all based off pro forma financial information, not statutory. Now, the reason they're doing pro forma, it's all because of an acquisition they made and take into account that they did receive JobKeeper payments in 2020, and they have paid those JobKeeper payments back. So they've taken into account, that's why they're looking at pro forma financial information, not statutory. And their forecast for financial year 21, because they released or IPO'd before the end of financial year 21, the forecast for revenue was 647 million, EBITDA 208 million, and net profit after tax 74 million. One of my major questions about Australian Clinical Labs was how much of a benefit was COVID-19 having on their business? And they provided that information in the prospectus as well, looking at pro forma pathology revenue by half year, breaking it down into Victoria, other states, and COVID-19. And they did have a little bit of a benefit with COVID-19, but not a significant benefit. They also talked about their traditional services were impacted by COVID-19 as well. So it sort of cancelled each other out. Maybe COVID-19 had a slight benefit overall to Australian Clinical Labs. But it was unlike these other companies that have a major benefit, they had a slight benefit. So this did ease some of my concerns that Australian Clinical Labs' financial performance was being helped largely because of COVID-19. I've changed my opinion now and think it's just the management have been doing just a wonderful job over the past few years. Australian Clinical Labs listed on the ASX on the 14th of May 2021, and only 3 weeks later, they released a profit upgrade. A company can't do any better than that, and they needed to inform the market that the performance of the company was doing better than they had expected and had given us in the prospectus. Total revenue was now expected to be between 658 and 663 million. That was an increase of 2 to 3% from the prospectus forecast. EBITDA now expected to be between 217 and 223 million. That was a 5 to 7% increase on the prospectus. And net profit after tax now expected to be between 82 and 85.4 million. That was a 10 to 15% increase from the prospectus forecast. Whenever you see a profit upgrade, the natural tendency from the market is to become more enthusiastic about the company, and you will usually see the share price rise. Not always, but usually. And when we look at the chart, I'll show you what happened or how the market reacted to this profit upgrade from Australian Clinical Labs. Because those forecasts were about financial year 21 numbers, we know how the company has performed because Australian Clinical Labs released their financial year 21 results in August, and revenue came out as 674 million, which was greater than the upgrade they'd given at the start of June. Gross profit margin about 80%, net profit after tax 88.7 million, and remember their revised forecast or guidance was between 82 and 85.4. So profit after tax was higher than the revised forecast. Operating cash flow 137.7 million, increasing from 28.1 million in the previous year. And that's also taking into account, not taking into account they have lease liabilities of 70 million. So if you take away 70 million from operating cash flow, you still have 67.7 million, have net debt of 64.1 million, and the enterprise value is just over $1 billion. So based off the numbers, their revised forecast or guidance they gave at the start of June was actually a little bit too conservative. They actually performed better. And the market did respond to these improved numbers they saw in their financial results. And that's actually when I decided to take a position in Australian Clinical Labs. One thing you do have to be aware of with Australian Clinical Labs is the difference numbers you'll find in their financial statements compared to the numbers that Australian Clinical Labs is reporting. For instance, if you go to the financial statements and look at revenue there, it's only 644.7 million. That is statutory revenue. But Australian Clinical Labs is reporting pro forma revenue, taking into account some adjustments. And there was a pro forma adjustment of 28.9 million, which I think has something to do with JobKeeper, and they are or have repaid JobKeeper. And because they are reporting in pro forma numbers, revenue, EBITDA, and all those, even moving forward, that's what I'm going to focus on with Australian Clinical Labs moving forward. So just be aware, the numbers you see in the financial statements might be a little bit different than the numbers that the company are or is reporting. I may have said earlier that Australian Clinical Labs have released 2 profit upgrades in the last 3 months. Technically, it's been 3 profit upgrades in 3 months, because in their financial year 21 results presentation, they upgraded their first half financial year 22 numbers in regards to revenue and net profit after tax. So they are now expecting revenue to be between 362 and 375 million. That's an upgrade of between 18 and 22% on the Prospectus forecast of 307 million. And even more impressive, they're now expecting net profit after tax to be between 48 and 53 million. That's an increase of between 109 and 130% to the Prospectus forecast of $23 million. And lo and behold, just 1 month after they had their first profit upgrade for the first half of financial year 2022, they've released another profit upgrade in regards to revenue and net profit after tax. So if you remember, revenue in the prospectus for this first half was expected to be 307.4 million. They increased that on the 26th of August when they released their full year results to be between 362 and 376 million. Now they're expecting revenue to be between 398 to 414 million. That's an increase of between 30% and 35% from the prospectus. And with net profit after tax, in the prospectus they were expecting 23 million. In the 26th of August profit upgrade, they increased that to between 48 and 53, and now they're expecting net profit after tax to be between 64 and 70 million. That's an increase of between 178% and 206% from the prospectus. Now, I went through the commentary of the reasons why, and I did mention the continued strong demand for COVID-19 testing. So that was one bit of information I was like a little bit wary of, but they also mentioned the sustained relatively resilient performance of the non-COVID-19 business. So it seems like all the business they have, pathology services they are providing, are doing very well right now, even though Victoria and New South Wales have been in lockdown. And they upgraded net profit after tax because of increased scale and operating leverage. And a lot of that has to do with really good management performance. So I do think a lot of this increase in performance of the company is because of really good management the company has right now. They also acknowledge a lot of uncertainty and difficulty in forecasting, but they have assumed a reduction in COVID-19 testing in October and the prospectus forecast for November and December. So they are being or erring on the cautious side. I really like when management on that side of things. I do prefer management to be a little bit conservative in their forecasting numbers, just because forecasting is a hard thing to do. And I think Australian Clinical Labs management understands that. Though Australian Clinical Labs has only been trading for about 4 months, we still can take and derive a fair bit of information by looking at their chart right here. We can see how the market reacted to the profit upgrades on the June the 3rd, the profit upgrade on August 26th when they released their financial results, and the profit upgrade on September 28. Now, the first profit upgrade on June the 3rd, initially the share price actually did rise 5%, but then over the next month, the share price actually fell back and hit this support level at $3.40 and then bounced off it. And then once we get into towards the end of July, we've seen a share price in Australian Clinical Labs move into this well-defined uptrend. When they released their financial year 21 results on August 26th, share price rose 7% on that day. And then their share price just went sideways for about 3 or 4 weeks. And when they released the upgrade on September the 28th, initially the share price was up 8% on open. And if you remember, on that day, the overall market was down about 1.5%. So we did see a fair bit of selling coming in during trading of Australian Clinical Labs simply because of the overall negative sentiment in the market. And that actually drove the share price down through the day. And in fact, Australian Clinical Labs finished overall down for the day, even though they had just released a profit upgrade. So I think there were two factors playing here. One was just the overall negative sentiment in the market. And the other one was there is potential that there's a large portions of the market was expecting a profit upgrade, and they're a little bit wary because it seems like, based off commentary, Australian Clinical Labs were or are benefiting from COVID-19 testing, particularly in New South Wales and Victoria. And because they saw the share price up 7-8% on open, I think there was a bit of profit taking during the early part of trading, and that's what forced the share price down during the day. That's all I have for this profit upgrade video for Australian Clinical Labs. If you have any opinion on this company or any other company on the ASX, I'd love to hear your thoughts, your opinions, or your questions. So leave it in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.